Trump's Big Beautiful Bill has officially passed, representing one of the largest tax cuts in the US history. It is definitely a big win for President Trump, who was very keen on passing the bill. It is also very significant for the people in the United States for various reasons. One Big Beautiful Bill Act followed by this timeline. It passed the House on May 22nd, 2025. Secondly, it passed the Senate on July 1st, 2025 in a 51 to 50 vote with Vice President Vance as the tiebreaker. And lastly, it is signed into law by President Trump on July 4th, 2025 during an Independence Day ceremony at the White House. So the bill has officially become the law on July 4th, 2025. This bill will lower the tax rates, increase the deduction, and create several incentives that will allow savvy taxpayers to greatly reduce their taxes. But there is also a lot of confusion about what exactly this has passed at this point, leaving many people wondering how this new bill will affect their wallets at the end of the day, or what they can do to benefit from this bill. So in this video, I'm going to give you a quick, simple, straightforward explanation of what to expect from what it means and how it helps people to use the tax code to reduce their taxes every day. If that is helpful to you, please hit the like button below and subscribe to my channel and comment your thoughts as we go through this. So let's go ahead and let's jump into it. Okay, so let's start with the provisions that will impact almost everyone watching this, including you and I. Number one, the lower tax rates. Permanent decrease to the individual tax rates. This will quite literally the most expensive provision in this tax bill, expecting to reduce government tax revenues by over $2 trillion over the next decade. Or in other words, this is putting $2 trillion back into our pockets. Those are US citizens and whoever is paying taxes within the United States. 2017 tax cut reduced several tax brackets like 39.6% bracket down to 37%. The 25% bracket is now down to 22% and 15% tax bracket is down to just 12%. These tax rate deductions were originally temporary in nature and were set to expire at the end of 2025. But with this bill, that makes those reductions permanent. Let's move on to the numbers that are most impactful change. Number one, higher standard deductions. Number two, the permanent increase to standard deduction, which is 90% of the taxpayers' claim at this time. The 2017 tax cut more than doubled in this deduction, but that is temporary increase, and that was also set to expire at the end of 2025. This bill not only extends the deduction, but it also makes it permanent. This change alone is projected to save taxpayers over $1 trillion over the next decade. It also makes temporary upgrades to the itemized deduction, which taxpayer can choose to take instead of standard deduction. The next one is increased SALT cap. So prior to this bill passing, there was a lot of fuss about SALT deduction, which allows people to write off their state and local taxes on their federal income tax return. Well, the 2017 tax cuts caps those write-offs to just $10,000, which actually negatively impacted many taxpayers in high taxes states like New Jersey, New York, California, and the list goes on and on. Because if you paid higher than $10,000 in state and local taxes for property taxes, as an example, those of who you own houses, they already know, especially in New York, New Jersey, and California, that your taxes are a lot more than $10,000. This bill permanently increases the cap to $40,000 through the end of 2029, which will make the itemized deduction more beneficial for millions of taxpayers, especially who are paying a lot more than $10,000 in SALT taxes. But that's not the only temporary upgrade here. New car loan interest deduction. This bill will also allow taxpayers to write off up to $10,000 of their car loan interest on qualifying vehicles through the end of 2028. Now, this would only apply to newly purchased American-made cars and would be subject to income limitations, depends on your filing status as well. If you do qualify for this, you will be able to take this deduction even if you do not claim the itemized deduction. Also, if you have children, you have kids, then this bill will help you. The increased child tax credit. Families with children, you may also benefit from the new tax credit bill passed with this law as well. This is another provision that was set to expire at the end of 2025, which would have caused the child tax credit go to $2,000 down to just $1,000 per qualifying child. This bill extends the increase in child tax credit to $2,200 per child, which is expected to save taxpayers nearly $800 billion in taxes over the next decade. Now, this credit will continue to phase out based on your income level, starting at $200,000 yearly for single taxpayers and $4,000 for married taxpayers. This bill also increases the senior deduction. So let's talk about the increased senior deduction. Senior tax deduction for individuals over the age of 65. Prior to this bill, seniors were only entitled to a $2,000 additional deduction or $3,200 if they file with a qualifying spouse. This bill will increase that deduction to $6,000 for each qualifying individual, which is subject to income limitations based on their filing status. But considering the fact that this bill fell short of delivering on the no tax on Social Security promise, this is the least they can do for seniors, in my opinion. Anyway, while we're speaking of no taxes, let's talk about no tax on overtime, which is very well perceived subject and a lot of people are looking into it. No tax on overtime promises in the bill as well. Now, to explain in more detail, despite the name, all overtime wages will not be exactly exempt from taxation. What that means is this bill does is it allows certain individuals to take a deduction against their overtime wages, which will effectively result into no tax on that portion of their income up to a certain limit. Anyway, this bill will grant single taxpayers up to $12,500 deduction against their overtime wages and married individuals up to $25,000 of a deduction against those same wages. And this deduction will also be subject to income limitations as well, beginning to phase out for single taxpayers with over $150,000 in taxable income, for single taxpayers over $300,000 for married taxpayers filing jointly. Now, no tax on tips, which is another popular subject that people are trying to figure out. Let's talk about it. Limitations to the no tax tips provisions in this bill was considered as well. This bill will allow a deduction against qualifying tip income up to $25,000, and it is subject to the same income limitations that we just saw. And qualified tips, by the way, is defined as tips received in an occupation or professional who receives the tips income. This will also apply to employees and certain business owners that provide hospitality services, personal care, transportation, and certain creative and retail services as well. However, the specialized service trades and businesses do not qualify for this, like doctors, lawyers, accountants, dentists, or really any business. And speaking of businesses, let's go ahead and address some of the biggest tax provisions in this bill, such as the enhanced QBI deduction. Well, like the permanent extension of the QBI deduction, which will literally save business owners billions of dollars in taxes over the next decade. So the QBI deduction was originally introduced in 2017, which granted qualifying business owners an immediate 20% deduction against their qualifying business income. So as an example, a business owner that earns $100,000 in qualifying income would get $20,000 tax deduction to use that against that income. For individuals earning below a certain threshold of income, they would automatically qualify for this deduction as long as they had some form of self-employment income, whether it is through the S Corp or partnership or single member LLC or an uncorporated business like a side gig for an instance. Then this deduction starts to phase out for certain types of higher income earners, business owners with specialized trades or businesses. But not all the business owners are actually subject to those income limitations. Prior to this bill, this provision was going to completely expire at the end of 2025. So think about how big of an impact this would be. But this bill will permanently extend this provision for good. Plus, it increases the income tax threshold to qualify by $25,000 to $50,000. Depends upon your filing status, which will allow certain high income earners to qualify for this under the new rules where they did not come before under the old rules. Some of the business owners will also have the opportunities to segment their business structure to qualify for this, which could essentially allow them to split some of their business income into structure that does allow them to qualify for the QBI deduction as well. 100% bonus depreciation. What does that mean? QBI reduction, there is another big tax incentive in this bill for business owners, the permanent extension of bonus depreciation, which is pretty big. Bonus depreciation grants an additional tax deduction against the tangible business owner investment properties like vehicle, machinery, equipments, furniture, fixture, tool, even big things like aircrafts and yachts. Prior to this bill passing, the deduction was limited to just 40% in 2025, but this bill increases this rate back to 100% for all qualified purchases made after January 19th, 2025. This will also allow many business owners and investors to make strategic purchases that will help them to earn more income while reducing their taxes at the same exact time. Now, if you have any questions, write down in the comment section below. One more thing I wanted to also tell you about this bill is 100% R&D expenses for businesses. This change are for the business owner, and this is pretty big. This bill will also permanently extend 100% R&D, research and development, expensing as well, which is virtually allowing any business that is developing or improving upon their product processes, techniques, formulas, or software to write off 100% of the qualifying research and development expenses as opposed to receiving the partial deduction in the past. It also permanently renews the extended opportunities for zone credit and enhance the opportunities for zone tax credit, which has followed investors to defer and avoid capital gain taxes when making investments into qualified opportunity zone funds. I'll be creating in-depth video guides and get in more details, but click the like button, subscribe to the channel so I know that you like this content. If you have any specific questions, write down in the comment section below. Drop a note for me. At the least, hit the like button and I'll be grateful. Motivate me, inspire me, and I'll see you in the next video. Thank you for tuning in and watching this.